Invested Minds, welcome to a new video. As you already hear, Zakaria Aka Crypto Zach is not here today. But that doesn't mean that there will not be a video. We are gonna give you the best top 5 trading tips of all time. These tips are so simple that you can use it immediately. So enjoy the video and don't forget to join the Invested Minds community. Subscribe, like and leave a comment. Today in this video we are gonna give you the top 5 technical trading tips in 10 minutes. So let us start immediately. On number 5, we have the macro trend. As trader you need to figure out on a bigger time frame if that specific asset, commodity, or money is in a downwards trend or upwards trend. Zoom out and analyze. Ask yourself, do you see the peaks in the chart getting lower and lower comparing with the previous peak? In other words, do you see lower highs? If yes, know that bears, or in other words sellers, were or and still in control. For example, Bitcoin is finding itself in a bear market. In other words, in a downward market. That maybe could end in the coming months, inshallah. But do you see the opposite? Meaning on a macro picture the chart is showing you that the dumps are getting weaker and weaker comparing with the previous dump. Meaning each time the market dumps it doesn't go lower than the previous low, showing that the market is printing higher lows. Number 4. Open the monthly, weekly and daily charts and search for major support levels and major resistance levels. Learning support and resistance is the basic of technical analysis. Major or strong support means the risk you buy and lose money is way lower than in the most areas of the chart. It also means that the buyers are way stronger in that area than the sellers. Smart money are mostly waiting patiently for those kind of price levels. Major or strong resistance levels are price areas where the sellers, mostly smart money, like to dump on the people. These areas occur after a strong bullish upward price action. Don't buy at these levels because you will end up being slaughtered, mentally and in your pockets, haha. Strong buying areas occur at strong support areas, and good sell areas occur at strong resistance areas. In the end you need to buy low and sell high. Easy said, difficult to do. Number 3. Learn price action patterns. In the end all the price action you see in a chart are human emotions. With the candlesticks in the chart you can find these emotions back in different patterns. Some patterns show that the most likely outcome will be to the upside and some patterns show the opposite. Price has a higher chance to fall down. So learn these patterns and combine them with strong support and resistance levels. Further, each pattern has its own price target and its own way how to trade it. Further, you need to understand that each pattern has its own story and data about how the sellers and buyers behave in that time frame. Number 2. Here is some nice knowledge based on our 10 years of trading experience. This price action doesn't respect you and it doesn't know you even exists is some way. The markets doesn't care about your feelings. So the moment you want to enter a trade, consider price fakeouts by laddering with several amounts into your position or investment. Sometimes your analysis on the chart is on point but it chooses to follow another path. With laddering in, considering tricky fakeouts and determine how much money you want to risk or invest will lead to proper risk management. While you are preparing all these measurements you need to be very patient and not emotional. Stick to your plan, dear invested mind. Number 1. You need to understand the most important aspect, that you are a real trader like a physical one on a fruit market. You need to understand that smart buyers like to buy for the best price and sellers like to sell for the highest price. But those are not the only players in these dark markets. You are forgetting about the most important player, the house or the casino, or how we say in the trading world. The market makers, like the big brokers and investment firms. You to think and understand a little bit like them. They want to take the most amount of money in the shortest time from the most people. They have the ability to manipulate the market with fake news like yesterday, or with spoofing the order books. There are a lot of ways how they manipulate the markets. But most important in our humble opinion is this: how can they trigger the most transactions in the order books to make the most money? They look where the most liquidity is hanging around in the books, and they will try to trigger them. Here are two examples of liquidity hunts: 1 stop losses and 2 liquidations levels. We can talk hours about this topic, but for you to prevent yourself from big life-changing losses is understanding how the big smart money like to make and take your money. Welcome to the Invested Minds community, and see you on the next video. Please don't forget to subscribe, like and support the channel. Assalamu alaikum.